Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is December 26, 2019. Shout out to my man, the Tech Geek, out there on YouTube for the song request today. Lil Dicky, Save That Money. Man, this guy, Lil Dicky, when he came out with this song, I didn't take him seriously, but this guy actually is a very good rapper. So check out some of his, I haven't heard anything lately from this guy, but very good song, man. Thanks for the song request for today. We need to save that crypto, right? So what's going on, people? Welcome to another episode. Hope everyone had a good holiday. Today we're going to be looking at some things that caught my attention. One being, of course, I'm not going to really talk about it today because I'm going to really get into it and give you my feedback on the whole situation going on crypto Twitter. Really, I should say crypto YouTube. A lot of people on crypto Twitter talking about it though. But this whole YouTube ban that kind of went down on all the crypto YouTubers, or a lot of them. I wouldn't even say a lot of them. Actually, it's not a lot of them because there are thousands of YouTube channels out there. And I think I would say a handful, maybe 100 or so, maybe even less than 100. I don't know how many, but it definitely wasn't like everyone. Again, I'm going to get into the details over the weekend on my live stream. I've got a lot to say about this whole situation, and I think it's going to be reversed. YouTube admits that this Bitcoin ban was a mistake, so I'm not going to go over this article, but it is something that's really trending right now in the crypto community. Yeah, I'm going to save my two Satoshis for this weekend. I got a lot to speak on regarding this topic, but yeah, it looks like YouTube did admit that they made some mistakes with this whole situation here. So I assumed, if from what I heard, the rumors going around on how this occurred, I said if this was true, this will all be reversed. So nothing to really get too concerned about, I would say. I just wanted to give you guys an update on what YouTube said regarding that. But what we will be talking about today is something out of Cointelegraph. MetaMask contributor says that the project lacks support from consensus, which is very concerning because MetaMask is a critical and integral part of the Ethereum ecosystem. And so I would think that would be, a priority for Consensus, the foundation, the Ethereum Foundation company, to really get behind and support this company. That's how many people interact with the Ethereum blockchain from, the browser. But we'll take a look at the details, see what this contributor is saying. Also, this caught my attention. Really was a shock. I've been tracking and buying Hedera Hashgraph tokens, and it's been getting slammed for sure. Was more interested in the concept, not so much for the speculation. I think that over time, if they continue to grow and increase their ecosystem and their footprint out here on the blockchain, this is one to keep an eye out on, I think. But this move by them was a little concerning. I didn't like that this was even being proposed. So they're essentially proposing an emergency token lock to save tanking price. It just lets me kind of know that their focus is on the wrong thing, especially from, let the speculators do what they do. We're going to speculate, trade, whatever, right? But from the company perspective, I don't think they should be concerned about price. But that's just my two Satoshis on it. We'll take a look at this article out of, I think it's CryptoVest, and see what they have to say. And then lastly, another Ethereum topic. Wow, this to me is very bearish. Ethereum co-founder sells 90,000 Ethereum on Christmas, sends it to Kraken. I think I saw something out there talking about Vitalik Buterin denying that he moved coins. Maybe people got it confused with this individual, Jeffrey Wilk. So we'll read through the Trust Nodes article regarding this move to Kraken, these Ethereum tokens, and get your feedback on this. What does this mean? Does this mean anything to you? I mean, it would to me, I'm not trying to compare any of these blockchain technologies, these ecosystems to publicly traded companies. But, if Elon Musk, let's do that. If Elon Musk sold a big chunk of his Tesla stock, that should be of some concern. Though I think maybe using Elon is the wrong example, because he said he's going down with the company. If Tesla goes bankrupt, he goes bankrupt. If SpaceX goes bankrupt, he's going bankrupt. He said that in an article or a tweet or something last week. So maybe the wrong example as far as the individual, but you get what I'm saying. I would be concerned. So we'll take a look at this out of Trust Nodes as well. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. But before we get started, yes, Prime XBT, I'm going to leave a link in the description below. If you're looking for a new exchange to trade on, maybe take a look at them. They do offer 100x leverage, but you got to use that with caution. I'm telling you guys, I would never use 100x leverage. Max I use is 20x, but they have the ability for you to do that. It's a BitMEX competitor, but what's really interesting about Prime XBT is that they offer a wide range of assets to trade, not just cryptocurrencies. So you can trade indices, FX, they've got commodities as well. So check them out. I have a link in the description below. And also EOS Locally, I did a video, a full overview of the EOS Locally platform. Check them out if you guys are looking to buy EOS or get your feet into the crypto game via EOS with no KYC. You can buy and sell while keeping your privacy with peer-to-peer fiat transactions. Check them out, eoslocally.com. I'll have a link in the description for that as well. No custodial either, so they never hold your funds. The EOS is sent directly to the smart contract on chain and is secured by escrow. Again, check them out, eoslocally.com. So let's get into the first article for today. MetaMask contributor says that the project lacks support from Consensus. I was actually shocked to hear this. The contributor of a major Ethereum browser extension, MetaMask, has reported that the MetaMask team is totally overwhelmed and not being prioritized by its parent company Consensus. In a Christmas post on Reddit, user Lazar Idis Com3 alleges that the MetaMask team is not getting the support it needs from Consensus, and consequently the whole team of 24 employees are overwhelmed. It said the post titled "Help MetaMask Out of Its Activity Trap" goes on to say that MetaMask team has a number of unsolved issues and its inner workflow structure is neither transparent nor decentralized. It says one cannot follow development via the public issue tracker simply because the team uses an internal tracker and internal meetings. This is not transparent. This is not decentralized. MetaMask is a critical value moving piece of Ethereum. It is written in JavaScript, nearly completely untyped. The code is of low quality, full of technical debt, both in terms of code and architecture. So he went on to tell Cointelegraph that he is participating in the project as a contributor, citing his GitHub account. As part of suggested solutions to existing problems, the contributor urged that the MetaMask team needs to fully migrate over TypeScript immediately. He also suggested that Consensus needs to implement stricter evaluation of its spokes, a strict and binding set of rules for public projects. The developer also argued that Consensus software project, referred to as GitCon, needs to be far more uncontrolled and needs to become attractive. So I initially thought that this was a MetaMask concern, but really it's a contributor to the MetaMask project who's really being more critical at MetaMask and Consensus. So the article goes on to say here that in the post, this particular person specifically criticized the structural issues in MetaMask's team. According to the post, MetaMask actually maintains team leads despite Joe Lubin, Consensus founder and co-founder of Ethereum, trying to convince everyone, quote unquote, that Consensus is a non-hierarchical company. Specifically, the post mentions MetaMask's employee David Finley as one of the leads who's totally overwhelmed. According to Finley's LinkedIn page, he currently serves as lead developer on MetaMask at Consensus, with his primary responsibilities focused on the browser extension. And so Cointelegraph contacted Finley regarding the issue, but has yet to receive a response. Additionally, the post also mentions super low bounties, noting that some of those bounties equate to less than $1 per hour after calculating how much time the tasks take. In October, Lubin announced a goal to grow the number of developers on the Ethereum blockchain to as many as 1 million in 2020. Dubbed 1milliondevs.com, the initiative was announced by Lubin at a major Ethereum-focused conference, DevCon, in October 2019. So, I don't know, man. I mean, there are some alternatives. You can use Brave browser. They have an inbuilt, in-app wallet that I think is, comparable, right? Yeah, so it runs off the Ethereum network as well. So maybe look at that, but it's just interesting to see this guy kind of call out MetaMask and Consensus as well. What are your thoughts? Let me know your 2 Satoshis on the situation in the comments below. I think maybe they want to keep things centralized, right? That's what it seems to be. But again, I would suggest just using the built-in wallet in Brave browser and get a lot of the same things done there. This one was kind of a shocker. Hedera Hashgraph proposes emergency token lock to save tanking price. One of the highly hyped projects has seen its token price lose more than 90% of its value attempting to salvage through a token lock. Again, I don't like this because, again, I feel like the project should not even care about what the price of the token is. They should be working on the infrastructure, the usability, the utility of the blockchain that they're building. It says here that the project, once presented as a promising network to rival the best blockchains, has met the most common fate of crypto startups, a tanking token price. So HBAR token started trading around 15 cents in September and quickly wiped out most of its value. HBAR now hovers around 1.5 cents, wiping out 90% of the value with dwindling volumes. And I think I started purchasing around 10 cents. 10 or 9 cents. So yeah, I've lost a lot, but I didn't buy a lot. So it may be time for me to start dollar cost averaging in here. Article goes on to detail that HBAR only allowed a very brief period in which to sell tokens and make a very small potential profit. The ICO price of HBAR was relatively high, hurting investors even more. Now the token has a large community with skin in the game, expecting a miraculous recovery or at least a bounce from the rock bottom prices. But HBAR may be pressured by fears that altcoin projects may continue dumping in the coming year. The project's proposal to become a smart contract and dApp app development platform is not even enough to keep up the optimism. The rapid slide of the HBAR price, however, was seen as ongoing, going beyond the generally depressed state of the altcoin market and to be a sign of dumping. To compare other projects on Binance, such as Chainlink and Cosmos or Atom, went against the market and even rallied significantly in the past quarter. Hedera Hashgraph also aggressively pushed its token to retail investors, potentially siphoning away their investment for an asset without a solid value. Additionally, many of the ICO buyers are actually not outright HBAR owners, but holders of prelim tokens or SAFT assets. So their proposal is that any current SAFT holder that chooses to participate will receive the full number of coins expected in their original SAFT agreement, but will agree to extend the distribution schedule for what remains of their original SAFT allocation by 25%. In exchange, Hedera will repay the full value of the original investment over time in coins at a rate commensurate with network growth and adoption, explained the CEO. And so I don't like this. I'm gonna be honest with you. I'm not a fan of them even thinking about the price of the coin. Let the token, let the speculators do what they're going to do. Just focus on building out the platform, making it attractive to enterprises, and go at it that route. I don't think trying to save face on the price and lure people in to keep holding, to stop selling, and stop the selling pressure is a good idea at all. So I'm pretty disappointed to see them doing this, to be honest with you. In the last article out of Trust Knows, looks like one of the Ethereum co-founders sells 90,000 Ethereum worth around $11.5 million, 92,000 to be exact, Ethereum on Kraken. And that was yesterday on Christmas Day. Says Trust Knows says their blockchain analysis began with an account that moved 408,000 Ethereum in January of 2016. This account was funded by the Ethereum Foundation Dev Wallet. Presumably, the funding was part of the initial distribution that the founding team got at the inception of Ethereum. And so that 408,000 ETH was moved to the above address back in 2016, an address that shows continuous but gradual selling or movement of funds until this Christmas. It sees a sharp drop in funds. It still has 218,000 ETH, which is around 27 million, but 90,000 of it was moved first to what looks like an intermediary address, then was sent to a Kraken address. Interesting. Here's a ledger on that transaction. Very crazy. So we know that this address belongs to Jeff Wilk as much as anything can be known, because the originating one interacted with the Ethereum name service about 2 years ago. Thankfully, Etherscan shows us what that interaction was, and it was address registering the name Jeff Wilk. So this pretty much does tie it to him. So based on these facts, there is little doubt that the 92,000 ETH belongs to Wilk, with his Christmas presumably very expensive, as he looks now to be a millionaire by New Year. And get this, his GitHub shows no activity since March of this year. After making millions, he appears to have left, with his Twitter suggesting he is working on some sort of game. Describing the early history of Ethereum, Vitalik Buterin, another co-founder, says Jeff Wilk, lead developer of the Go client, back then called Ethereum, also reached out and started coding around December 2013, though his contributions were much more on the side of client development rather than protocol research. So it looks like he ended up confirming that this was true, though the blockchain doesn't lie, and Trust Knows pretty much connected the dots anyway. He confirmed that he needed the money for his game. So he says here, Jesus Christ, nothing goes unnoticed. Need money for my game, yo. Well, I mean, he shouldn't even have to explain himself, to be honest with you. It's nobody's business, you know, whether it's for his game, which I'm sure it's not all for his game. No one's stupid. Is that some of that is for his personal gain and purpose? Hey, whatever. You know, you can't hate on that. So interesting to see that. Should this be some type of bearish signal for you for the Ethereum project as a whole? I'll let you guys come to that conclusion. There are other things in my book that have me concerned about the Ethereum project as a whole anyway. So other than this really, I mean, maybe, but this is the least of my concern when it comes to Ethereum. Hey, but that's my 2 Satoshis on the subjects today. Shout out to the Tech Geek on YouTube for the song request. Lil Dicky, Save That Money. If you found these articles informative, make sure you hit the like, share, and subscribe button, and click that bell to receive more unbiased news reported by yours truly, Crypto Blood. I'm out of here, people. Holla!